Starting with a toilet flush. Good morning. Welcome to the market forecast. It is Tuesday, November the 3rd, Election Day. Thanks for trusting me with your time. I'm John Hoagland. As always, if you're in the markets, we're hoping things are going your way already. But as the title of today's forecast suggests, it's one of those days where it feels like we're going to have to hurry up and wait. We don't know what the outcome is going to be. It's going to be a crazy day. It's going to probably be a crazy rest of the week. If you have not voted and you can vote, please step out, go vote. I voted the other day. Didn't take long. Hopefully, there won't be any long lines. Make sure that you get your voice heard. Eco numbers this morning. 9 o'clock factory orders. Not expected to be very impactful considering the weight of the day. We also, just pointing out, it is an FOMC week this week. A lot of folks probably overlooking that. The release, however, will be on Thursday at 1 o'clock, not Wednesday. The meeting begins on Wednesday. The release will be on Thursday. And we also have our unemployment numbers due out on Friday. So, on top of everything else, we do have important economic numbers due out this week. As always, we're going to look at these markets with some sort of context, if you can put some context over the markets during election day. But we're always thinking about risk management first. Seen a couple of opportunities already this morning near weekly kickoff levels, namely gold. We're going to see how that's playing out for us very shortly. As far as news is concerned, yes, finally it's election day. It is here. Today is the day. Please vote. U.S. stocks seem to be in a good mood this morning in hopes that there will be a clear winner. And a lot of the talking heads suspecting that a clear winner will perhaps expedite some of the possibility of COVID stimulus. That would not be necessarily a bad thing, right? Crude prices have rebounded. I guess there's some hints that major producers are preparing to abandon potential production increases. They don't want the price of crude oil getting too low, of course, so they're going to possibly cut off some of the supply. I don't think that's going to hurt us here that much as far as the price of gasoline here just yet. The outcome of the election might, but hopefully, as this COVID infestation starts to fall off, hopefully, again, we'll be getting vaccines very soon. We are always hoping and praying for the best with that, in that regard. But as demand begins to increase in gasoline and jet fuel and everything else, hopefully they'll be able to ramp up production pretty quickly. It seems as though they've been holding off to some degree. Hopefully that production will come back online relatively quickly. We have don't forget to like, share, comment, question, feedback, and heckling are always welcome. Nobody enjoys a good heckling more than I do. Make sure you subscribe to our YouTube channel so you can get notified for when we do go live. We do have the coach's playbook today, right around 11:30-ish. Three of us will be available today. We're going to be talking about what it's like, our experience trading during elections and some of the things that we may experience in the coming days. VIX 3544, not necessarily expanding volatility here just yet, as we do have election day. It's a little high, but it's off of that 40 level that we were experiencing last week. So perhaps that is likely to change. The dollar index not too far off from where it closed yesterday, 93.58. We see our euro heading to the upside after a test of weekly kickoff low. We're going to take a look at that very shortly. As always, I do like to say good morning to everybody. Welcome to the market forecast. Felix Escobar, but first one in the room, you win the prize. Charles March, D. Munoz, 33, good morning. There's a name I'm not sure I've seen before. Welcome to the market forecast if this is your first trip here. Charles Lucas, hi all. Overnight session was a very calm and gentle trend for S&P. Patrick Murphy, happy good morning, happy election day, everyone. Charles, I think tomorrow will get crazy, and that's kind of why I put that title up for us. Um, is Today is going to be kind of a hurry up and wait day. The election is today. We're not going to find out any results until later on tonight at the earliest. So today seems to be one of those hurry up and wait days. It's the coming days where I think we may see our volatility come into the marketplace. Joshua, blessings to all. I second that. Blessings to us all. Danielle, good morning. Guten Tag. Charles, volume is so low. I've never seen it like this. Um, Prior to the session open, I think is what you're trying to say, or pre-open. Take a look at your dome too. I mean, if you're looking at the S&Ps before the open here, it's down to two digits. Usually, there's a couple hundred bid and offered at each price in that dome. The liquidity is waning in these markets. That's going to create bigger moves. It's going to, if there is a major move, the lack of liquidity is going to create moves that are going to go way too far. It's also going to create more slippage. If you have a stop in, hopefully you are using market stops, because a stop limit can just get run through. It's not guaranteed to fill. Use market stops, but remember, you're probably going to experience a lot more slippage in the coming days as the liquidity is down. Good day, Tanya. Good to see you. Joshua, today is not a normal day. I guess I'm amazed that we even have people trading. There's always people that are out there that are going to be looking to take advantage of price movement no matter what, whether they have the experience or the knowledge to manage markets that can become volatile at any given moment. There's a lot of headline risk out there today. We know that. So hey, they're out there. They're willing to take the risks, and that's what makes these markets great. It is complete meritocracy. If you find an opportunity and it's asymmetric, in other words, little risk, big reward, why not take it? Tanya traded micros this morning. May stick to that if she trades more, which you're going to see about that. Charles Lucas is done for the day and going to grab a beer and just watch. Hey, Charles, you cannot drink all day unless you start in the morning. No, hopefully it's in the afternoon or in the evening where you are, Charles, and why not, right? Mike, good morning. Subconscious. Wow, crude moved $2. Yeah, it did. There was a pretty important information. Vote early and vote often, Daniel Ireland says. Yes, that's a old Chicago term. Esteban, Michael, good morning. Doyle, James, good morning. Charles, Alex, Vast West, DJ R's, good morning. And Rob T, good morning. And Charles Lucas, that's right. John Dome looks quiet. Too quiet. Yes, I can agree with that. So, all right, without further ado, why don't we go ahead and jump into the charts here. Yes, extra medium Daddy Max. It is safe to trade the combine today. However, be careful. Make sure you manage your risk. Make sure you put in those stops. There's a headline risk at any moment today. I have no idea what to expect over the next. This is Jacob talking about. I have no idea what to expect over the next 72 hours from these markets. So I'm going to let this play out and see where we are then. Good luck to everyone. Jason, it's not a bad decision. Sometimes staying in cash, not participating is a position in and of itself. Jason, no harm in protecting yourself during these periods of time. And extra medium Daddy Max, you're welcome. Let's take a look at the charts here. So I've got the crude oil 30-minute up here. Let's start with the daily. Yesterday, we had a pretty stiff rejection of our weekly kickoff low. It got pretty deep down through there in the overnight. Not so much in the regular trading hour session, but we had a pretty big up move, almost from weekly kickoff low all the way to weekly kickoff high. That says something. Pretty decent volume as well. We added 16,000 estimated additional contracts and open interest. That indicates a potential change in direction. That's what I would say to that. Um, Acceptance above the weekly kickoff high opens up space, I believe, all the way up to about $40. The market is open. We've got to see what it looks like on the 30-minute chart. We've opened with a considerable gap, and it's going to be a big gap. It's going to be a low probability that we will be able to close that gap. A new upside auction began yesterday on good volume and an increase in open interest in that direction. This change appears to be healthy early in the change in direction. We auctioned lower. The auction lower has been rejected. A new auction to the upside has begun and appears to be healthy. Take a look now. Here's the 30. Settlement is down here at 36.81. We have weekly kickoff high at 37.30 right here. The market, in essence, overnight took a look lower. In the regular trading hour session, we never did get our test of weekly kickoff low. Sorry about that. But we saw the market moving higher over time, adding volume and adding over open interest. That's healthy towards an upside auction. Settlement being down here, we've probably got some overnight longs in this market, but it's a pretty substantial gap. I mean, when we're looking at this gap, I think we're looking at 37.02. So we're looking at a full dollar gap from where we are now. That's a pretty big gap to close. It's a little bit lower probability, and whenever we can't close a gap, we look for opportunities in the direction of the gap, which would have us looking for longs. There's absolutely nothing that says this market cannot come back down, retest this weekly kickoff level, which I would treat as an opportunity to use as support. Why? Because if it gets too much down through that, it's probably going to be telling me that the trade may be wrong and I need to get out of it. I'm always looking for levels and areas to limit the risk. If I can get an opportunity down near this weekly kickoff low today, it's something I would consider for an execution, again, because it allows me the opportunity to limit the risk. So gap rules, overnight longs. If our regular trading hour buyers continue to come in and buy this market, our overnight longs are going to continue to get paid. And again, I see space all the way up to about that $40 level. So that gives us another $2 to the upside if that is indeed the way the market goes. All of these things are hypotheses. Everything we talk about, we don't know. We are just using our previous knowledge and experience to speculate, to put a hypothesis forward, and then hopefully to use that hypothesis to get us in the right direction when the opportunity comes. Anyways, here's the S&Ps. We've got our 10% correction level, which is our weekly kickoff low here at 32.18. We looked kind of close to that level on Monday. It is this week's weekly kickoff low without a test of it so far. Monday's rally was on pretty good volume. Remember, the market, the S&Ps, the equities don't tend to bring in huge volume on up days. I'm looking at this volume on this up day as relatively strong volume for a day of that in that regard. We lost 9,800 in open interest. So some of our shorts, okay, either in profit or shorts down in the hole here, we're probably getting out of some of those contracts. Now remember, we have the what was I looking for here? Remember, we have information. We have the election coming in, and a lot of our speculators are more likely going to be getting out of their positions than getting in to those positions, because of the uncertainty of what's going to go on in the marketplace. So it makes sense to me that we lost a little bit of open interest. We're centrally located between weekly kickoff high and weekly kickoff low in the S&Ps. What are we looking for here in the 30-minute chart? Again, we've got a bit of a gap. Settlement is down here. pretty close to our overnight low. Settlement is 3,300.50, 3,350. So we've got a move and a test of a previous weekly kickoff level at 33.20. We've got a gap to the upside. Our gap to the upside seems to be kind of creating perhaps a bit of a bull flag. Bull flag means the market's moving higher. We have smaller ranges in the opposite direction. When we break that range, we break the high end of this channel, then we may see this market continue higher. Again, the open with a gap indicates gap rules. Got a lot of overnight longs in this market. That's okay as long as we see new money coming into this market to the long side after the open. Again, who is going to who are those going to be? Those longer time frame traders. Are they really going to be interested in creating new positions today on election day with uncertainty in the marketplace and who's going to win the election moving forward? Not sure who those traders are going to be, but I'll be watching for them. And Doyle, I agree, expect volatility at any moment. The NASDAQ. Here's the daily in the NASDAQ. We have price also centrally located between weekly kickoff high and weekly kickoff low. In a normal, and I use the term normal loosely, market situation, we would be looking at this as short time frame control in this market. With the current situation, I think a lot of our participants are just working to liquidate positions or protect themselves against major price movement. They're hedging. They're hedging their bets here. People want their risk off, but they don't want to get out of longer time frame positions. These are opportunities for the market to kind of even itself out as far as inventory is concerned, and I think that's probably a large part of why we're back in this consolidation area, centrally located between weekly kickoff high and weekly kickoff low. The 30-minute chart. We're not going to be opening with any kind of a gap. It's a little bit different than the S&Ps. Looks like we're going to be opening in range. Settlement is, again, 11,063 and a quarter. 11,063 and a quarter. Pretty close to our overnight low, our overnight high. Still inside yesterday's range. So I'm looking at this as a potential opportunity for us to use value high from yesterday as a level of execution. Look at what we did here on Friday. We opened outside value. We attempted to re-accept inside value, which was rejected, and price moved lower. Yesterday, we opened outside value. We tried to continue. We moved back to value and then all the way through value yesterday. So when we open outside of value and we have an opportunity to test the extreme of value, if we accept, there's a tendency to go all the way to the other extreme. Today we have a similar situation. If we open with some overnight longs and we can't re-accept inside value from yesterday, I'll look for the market to continue higher. If we re-accept inside value from yesterday, the first move would probably be back down to settlement, then perhaps down to point of control. And if it's a real move, price could go all the way back down to the low of value from yesterday, which would be a pretty interesting and a pretty substantial opportunity. But again, we have to find acceptance inside value from yesterday. What is acceptance? Very subjective term. It can mean, 2 30-minute bars closing back inside value. Sometimes it'll find acceptance very quickly and move very quickly through value. So again, acceptance is somewhat subjective. But the nice thing about it is, again, it's going to give us an opportunity to limit the risk. Risk management is our game. That is our job here. Our job here is to manage risk and then be able to capitalize on opportunity. All right, let's take a quick look at the gold and the currencies, and we'll get down to business here. I think I've been a little bit long-winded lately, and we've got about 8-9 minutes before the open. Gold. We've seen volume slowing as price continues to go to move lower off of this breakout. This is not encouraging for downside continuation. As a matter of fact, we see downside continuation has fallen off, and we're right back to basically where we started, that move to the downside. We lost 100 in open interest yesterday. Open interest was moot on lower volume. This test of weekly kickoff high here at 1909 even is holding as resistance at least for now. That weekly high, kickoff high, I'm viewing as somewhat pivotal. Take a look at the 30-minute chart. Okay, we do not have the opening range at the low of the regular trading hour session. We did, however, open with a gap, and we've moved away from that gap, which gives us an indication, hey, if we can't close this gap relatively early, we're going to look for continuation to the upside. This 1990 level has been providing resistance for us in the early part of the session here. If we can't find momentum, participation, or any time or volume above that level, I'll look for this market, which is holding some weaker hands longs, to give us an opportunity to look for a chance to get into a long at better trade location. So we're up against resistance now. If we bring this market back down to settlement, how about value low from yesterday, which puts us right along this trend line? That might be a nice opportunity for us. But for now, even though we've opened with a gap, even though we have some structure to the upside for the past few sessions, higher lows, higher highs, this level is providing a degree of resistance. If that resistance holds, we may see buyers vacate this market and have an opportunity to look for longs at cheaper locations if we are going to maintain that upside structure. Now into the euro. Euro providing a pretty decent opportunity off the weekly kickoff low from yesterday. Again, we have a volume divergence. Price continues to trade lower while volume continues to shut off. We noticed this yesterday. It certainly provided a decent upside opportunity almost at our weekly kickoff low. We had a drop of 3,800 in open interest on this move, on this narrow range, right at a support level. Sellers probably getting out of some of their profitable trades there. The market really just kind of falling off as far as volume and open interest. That indicates a change. A healthy auction brings in volume and open interest. A weak auction to the downside cuts off volume and open interest. It makes sense that this market is moving to the upside. Does that help us today? Well, here's a settlement all the way down here at 116.42. Our weekly kickoff low, 116.45. Look at the narrow range down there yesterday. The market really just kind of hanging out, not doing much. But the overnight, of course, we saw some buyers coming into this market. Our opening range remains the low of the regular trading hour session, 117.13. That's going to be somewhat important. This opening range is going to be a level that a lot of these overnight longs are going to be counting on as support. If the opening range falls, we may see this market unravel a lot of these overnight weaker hands longs that are in this market and give us an opportunity to look for better trade location for longs if we do get that pullback. So our overnight high yet to be tested. That's going to be an interesting spot for us. If we do continue higher, we have a naked point of control over here, which is right around 1747. And then we've got, of course, our weekly kickoff high, which is not that far away at 117.90. Pretty substantial move from weekly kickoff high to weekly kickoff low to weekly kickoff high if that were to happen today. Now into the Japanese yen. Centrally located inside weekly kickoff high and low. We would call this short time frame control. Last week's rejection of weekly kickoff high just took this market back down to a level where it can digest this information and decide where to move from there. We've got a little bit of volume divergence here. We don't know what the volume is going to end up being today. We lost 3,100 in open interest yesterday. Not that healthy for continuation to the downside. Um, and like, take a look at the 30 here. All right, settlement down here. Maybe some overnight longs. We didn't really open with a gap. It seems as though we may be rejecting price range from yesterday. Again, this level down here is an important inflection level. We haven't been able to really truly accept below it. We did close below it barely, but there wasn't much action down there. There was no volume. So it seems as though this market is primed to continue to the upside. I'm going to be, cautious, looking for opportunities to buy pullbacks in this market until proven wrong. So it looks like already we are accepting price above value from yesterday. We are currently at a naked point of control from 2 days ago. Watch the overnight high. All right, so hopefully some interesting opportunities for us. I'm going to put the URL for the group coaching into the chat right now. This is the Wednesday group coaching at 1 o'clock. That's with me. I'm going to be there answering any questions. I've got a few emailed in questions that we're going to start with first, and then we will continue on with the questions that are put into the Q&A room. Hopefully we'll have enough time to get through all of those. This next URL is for Wednesday's market therapy session with Dr. Andrew Menaker. Make sure that if you have the time, it's at 3:15. The markets are closed. We should probably be nice and calm and no positions on for the most part at that time. The doctor is going to be talking about how your management of discomfort is so vital to your eventual success in becoming profitable and consistent, and hopefully becoming substantially profitable. So, if you're in a combine, you can trade tonight. Blood Brothers, men. Maybe just do some watching today, and maybe a couple of very conservative trades. Not a bad idea. Crypto and analyst, what's up? Blood Brothers, men, crypto analyst, Nicholas Matheos. If you guys are new to the profile, welcome. Glad you're here. Thank you for participating. Thank you for joining us, and thank you for watching. I'm going to get ready here. We got a couple of minutes before the equities open, and I managed to stop yammering in time. Take your deep breath with me. Stay calm, stay cool, stay collected, stay humble, grateful, and creative in your trading today. Who knows what's going to happen? Looking forward to seeing everybody back here tomorrow morning at the market forecast. We're going to see how this thing has been playing out. Dan will be back with you today at 3 o'clock for the market recap. Looking forward to seeing you all then. We will be... Joshua, do we send questions for the doctor like we do with you? No. It's going to be in a Zoom meeting, so you're going to be able to use the question and answer section just to pop your questions in. I would suggest, if you have a specific question, soon as we open up and as soon as the doctor starts speaking, put your question in. Put it at the top of the list. I think we were pretty close to getting all the questions answered last time, and again, that's my goal, is we're going to try and get to everybody. But if we can't, I do apologize, and we're looking forward to seeing you there and seeing your questions. And the doctor, to me, is so calming and so smart. He's an active trader, clinical psychologist. He's really a wonderful person to come and join us for these sessions. So, all right, Tosh, good morning. Esteban, Vast West, Patrick Murphy, and Wilson. Today could be a trap either way. Jacob, yes, it very well could be. Get out there and learn something today. Try and make some profits. Most of all, protect yourself. Have a great day, and we'll see you later.